Okay, welcome back. There's 30 minutes to go for the pre-open session to kick off, and we'll look at rates. 26 points, so maybe a little bit of a cool off is what we've seen, but nothing very much else. Amnish Aggarwal is with us, Head of Research at Prabhudas Lilladher. Amnish, good morning. Good to have you with us here. Thank you for your time. Now, yesterday, Amnish, we reported that NTPC Green, which is the renewable arm of NTPC, is in the process of filing papers for an IPO very, very soon. And by the way, they've got big plans. Some 60 gigawatt addition to renewable capacity by 2032, government company, etc., etc. Would you look at NTPC more favorably because of this, because of the value unlocking, which will happen? I'm sure there will be good demand for this. Go on.
Yeah, thanks, Prashant. Good morning. The main thing is that renewables are being tipped as the, you can say, future of the energy. Now, if you look at NTPC in the last 2 to 3 years, the stock has got massively re-rated. It is nearly 4x where it used to trade at. And part of it is also reflected in that people have been factoring in the valuations of the green business. However, I think once the green energy business, which is, you can say, both solar and wind, they got separately listed. I think that company might trade at a premium to where the NTPC is trading today. Obviously, some sort of a value unlocking in NTPC itself can't be ruled out, but I think NTPC Green would be a stock to watch out for, depending upon how they execute and what are their plans for the medium to long term.
Okay, all right. Got that. Amnish, by the way, there's some interesting calls on Ola Electric this morning, so I thought I'll bring it up and we'll have our colleague Vinny give more details. Short point is two foreign brokers, they've initiated buy calls. Ola, remember, has fallen all the way after the major, listing pop, a couple of days after listing, actually. It's fallen all the way to about 103, 104. And now calls are coming in, looking for the stock to head back towards the zone of 140 to 150, in fact, 160. One of the calls is from Bank of America Securities. They've initiated this buy with the target price of 145. And the other is from Goldman Sachs. Their target, again, they're initiating with the buy. Target is 160. And basically, the brokers are saying that there's still a long way to go. There's penetration and costs of EV scooters is coming down. And that should be good for the company. More details on the specifics later. But short points are very interesting calls coming after the stock has corrected big time from its peak. Amnish, morning. So let's take it up. Ola straight away. It's always a source of great debate in the market. Which side of the debate are you on?
You see, as I said earlier, Ola is a typical concept stock. Okay. If you look at all the new age companies, tech companies, there is always a debate. Now, the issue here is that you have entered an industry which has got the strong incumbents like for example, Hero is there, TVS is there, and Bajaj is there. Although they were the late entrants, I think particularly if you look at TVS, if you look at, say, Hero through Ather Energy or Bajaj, everybody is actually, you can say, vying to take their share of pie. And these guys, they all have got deep pockets. Now, Ola, in terms of the economy, in terms of the way they have done backward integration, seems to be well placed here on. But having said that, a lot will depend upon how the new players ramp up in the coming few years. Because as of now, the two-wheelers, they are confined more on the scooter side and not on the bike side. And bikes are the predominant part of the entire two-wheeler market. So if you want to go for a tech company, pure tech company, which is into this, and I think Ather now is also looking for an IPO. So there could be some interest around that, but I think it is very catch-22 kind of a situation because even globally, you have seen that when all the incumbents, they try to come in and there is no big technology barrier over there, then I think it is not so easy going for any of these, you can say, new age companies. But having said that, you compare the market cap of some of the others, you will still feel that there is room for some upside. So I think it is very catch-22 situation for the next at least 6 to 12 months, unless and until you can say the volumes ramp up significantly from where they are today.
Okay, all right. So catch-22 is perhaps Amnish's way of describing a stock like Ola at this point in time. Well, that's Ola. By the way, we have a change of guard in the studios with us as well. We have Mangalam joining in. I don't know, you're riding the scooters, Ola or the jewelers. I know you've got your eye on today's sparkly listing.
Yeah, the sparkly listing today for reasons why. Because one, there was great demand. Secondly, the gold prices are higher. Thirdly, you have all the other jewelry stocks doing well. And fourthly, it was offered attractively as against all the other jewelry companies as well. So, I mean, that's the question for Amnish.
I think the big one is for viewers. I also did not know it, but I realized later that P.N. Gadgil is a very it's a highly respected jeweler in Maharashtra. So people outside of the state, those who are watching may not know it. Like for example, Senco is big in Kolkata and the eastern part of the country. So these are local jewelers, very big, highly respected from that zone, which now of course are coming. So I think
over the last you know 12 months or so, if you look at some of the jewelry IPOs, they've all been regional and regionally strong players. So Senco has been, of course, in Bengal mostly, 70-80% of their revenues coming in from the eastern part. P.N. Gadgil, you talk about Maharashtra, forget Maharashtra, Pune accounts for 65% of their sales. So extremely, localized, extremely well respected in that local area itself. That gives it a strength, but also its weakness, because how do you expand beyond your core area? You have Moti Sons Jewelers as well, which gets most of its revenues from Jaipur.
Which is where I sometimes get a little,
I think in terms of size, Moti Sons would be very, very small as compared
to... It's a lot smaller than P.N.
But you know what kind of catches my eyes when you get brokerage reports trying to equate the success of Titan and all the regional jewelers that they need to go the Titan way. That's when I kind of, stop a little bit, and it's probably good to ask more questions.
These are the vagaries of the bull market. The only, company which so far has shown signs of Titan has obviously been Kalyan because of its expansion beyond its core markets and also, into other regions of the country as well. And the stock has been rewarded, the street has rewarded the stock for that as well, 8 times in the last 2 years or so. But it's a question for Amnish himself. Amnish, this month itself, Kalyan is up 22%, Titan is up 4%, Senco up 18%, PC Jewelers up 32% out of nowhere, Moti Sons up 48%, and TBZ, again a local Bombay player, up 62% this month. The gap between the leader and the others is narrowing significantly. Would you bat for the leader right now at these levels, or maybe look at some of these others who are still trading at a discount despite the run-up?
You see, the situation in jewelry industry is changing. Like you said, that there have been a lot of players on the regional side who have come up. If you recall the history of, you can say, the jewelry listings over the last 10-15 years, why Titan is a Titan today? Because the company has an absolutely clean slate and very, very good track record. We have seen in the past also jewelry companies coming, doing well for, let's say, 2-3 years, and then they tend to fizzle out. And this has been the history in the past. Because many of these companies, they have been raising capital for the first time. The systems and processes are not that strong. And currently what is also happening in many of these players, that they are actually, their business model, we can't compare with Titan. First of all, Titan is a, you can say, is a much more scaled up player, nearly 40,000 crores of top line. Secondly, it has got strong balance sheet, but it doesn't take any bet on the, you can say, gold price. So that is why in such times, the profitability growth of Titan will be lower than many of these guys. Now, many of these regional and other jewelry players, they are holding a lot of gold inventory. And if you look at last, say, 12 to 15 months, the gold prices are up by nearly 20 to 25%. So that has actually provided them some sort of a cushion, and also it has boosted their profitability. And that is one reason that the prices of many of these, you can say, jewelry companies, they have been on the boil. Now, over the next 3 to 6 months, again, the prices of gold, they are likely to remain firm, mainly because of the central banks buying globally. That is one. And secondly, the expected interest rate cut in the US market. Although if the prices increase incrementally and if you adjust for the duty cut which had happened in India, the prices actually are higher than they were before the duty cut. Now, the comparable prices would be, say, roughly close to 78 to 80,000 rupees. Now, if the prices continue going up like this, I don't rule out that a demand at certain point of time, maybe after 2 months, 3 months, it will again languish. But having said that, the way some of the stocks in the jewelry segment are rising, I would be very cautious on this. Yes, Titan is not a stock which will give you 30% or 40% from here on, but for many of the other jewelry stocks also, I think it is time to focus on the balance sheet, on the numbers and the core fundamentals, because some of these profit margins or profitability that might not sustain for long.
Amnish, just a quick word on Zomato. We're also going to be looking at the Swiggy IPO very, very soon. Zomato, do you see more upside?
You see, upside can be there, but not the kind we have seen in the last, say, 6 to 12 months. Because clearly now Zomato is a 3-horse race. You are having food delivery, then we are having Blinkit, and then is your ticketing business. Now, if you dissect all three, I think in food delivery, I think a lot of the gains they have already accrued. Now, what the markets are betting on is mainly your Blinkit business, where given the kind of food and grocery market in India, there's a lot of scope to grow. And the third is the ticketing business. So I think if the incrementally, like what Blinkit has done to Zomato, if ticketing also starts contributing, definitely there could be upside to Zomato. There's absolutely no doubt.